Today's guest has been on the channel, and in the past, we've discussed the great currency reset. And it seems to be in full effect and in full force. And we're going to be breaking down what it means, what's happening, what it means for you, how you can prepare yourself for it. And today's guest is Larry Lepard. And so make sure you smash the like button on this video right over there. Right there down below, you can give us a comment down below that says Larry Rules. We'll link Larry's website right there down below. And we'll give a shout out to our sponsor, Vizsla Silver, one of our favorite silver and gold mining stocks. So thanks, Vizsla Silver, for being our sponsor. And it's good to see you, Larry.
Nice to see you too, Jake. It's been too long since we spoke last. Yeah.
You had a smiling face my entire introduction.
Did I? Yeah.
Yeah.
Well, thank you. I don't know what's smashing the like button. Wait till they hear it. Maybe they won't like it.
All right. So one of the things that you and I have talked a lot about, and that I've really enjoyed, you and I have had very in-depth conversations about the currency reset, and a lot of the things that you've talked about, we're really starting to see happen in full force. The Federal Reserve now saying inflation's 7.5%, of course, leaving out many things. Used cars up 40%, housing. They say housing isn't up that much, but it seems to be up hundreds of percents. And so we're seeing this off the wall debasement of currency. And so my first question is, how would you describe the insanity of the world right now and the mirage of our secure financial system that is seemingly decaying at record pace right before our eyes?
You just described it pretty well. I think insanity is a very good descriptor, and mirage of security is also pretty descriptive. I mean, what we're seeing, in my opinion, is the unwinding of, a lot of decades, at least the last decade for sure, of monetary excess. And it's what happens when you build a Keynesian system that requires ever increasing debt to function. And eventually the cycles of not creating enough debt and then creating too much and then leading to inflation and then not creating it again, they get shorter and shorter and bigger. I mean, a good way of putting that, I had it on Twitter, was a while back, was in the 2008 financial crisis, they created, round numbers, $3 trillion of new money, so to speak, to keep the system going. And it took them, 3 years to do that. In this particular financial crisis, the one that got triggered by COVID in March of 2020, they created roughly $4 trillion of new money, and they did it in 6 months or less. And so, it's really a mess. And, unfortunately, people are paying the price. I mean, I think probably all your listeners can relate. I know I can relate to filling up my car with gasoline, right? I mean, I'm not used to seeing $60, $70, $80, tickets for a full tank of gas. And, this is what happens when you have a system that's built in the wrong way and it reaches the endpoint. You get these big fugoid swings between massive inflation and then backing off of inflation and then coming back with more. And it points to, the thesis of my fund, and those who've listened to me before will know of me as an investor, which is, in order to protect oneself, you need to be a sound money investor. And the three forms of sound money that I advocate, and then each has a different role, are gold, silver, and Bitcoin. So I've heavily invested myself, my family, and my investors in my fund in those three asset categories because I believe they will provide the best financial protection against monetary debasement. And we are seeing monetary debasement right now that, to beat the band, right? I don't think it's ever been this bad. So.
Yeah, we'll get into sound money here in a moment.
Sure.
But before we go there, and at a format, and I don't even want to go to my next talking point because you said something that my wife and I have been talking a lot about. And if you're watching this video, first of all, excuse me for my jank background. I just moved into my brand new office, and I'm finishing setting up my studio. So I'm actually
I think it
in
looks
my
nice.
living room. Oh, it's
I think
okay.
it
It
looks
doesn't
really
look
nice.
that bad.
Yeah, it looks good. It's kind of got an Asian look to it, right?
Well, I got a beautiful view of the mountains, so even though it doesn't
Nice.
look good behind me, it looks good in front of me. And so my wife and I were walking, I think the day before yesterday, and she was asking me why is everything getting so expensive? And, I explained to her that when you have a debt-based monetary system, when you get to a certain point, when my dad always talks about when he bought his first house, my dad's about like 64. And when he bought his first house in San Diego, right off the beach, actually, probably $3, $4 million real estate. Now he bought it for, I think like $220,000. And
Nice.
interest rates were like 20%.
Yes, I remember.
And so I explained to my wife that, well, last time, they said inflation 7.5%, highest it's been in 40 years. And I said, well, last time they could stop this by raising interest rates, but now they put so much money into the system that
Right.
the entire everyone's money, most people don't have any money. It's trapped in the equity of their house or it's in their 401k. And so this, whether it's the assets in the stock market or the housing market, at this point, it's all relying off of cheap money to keep everything going. And I was reminded of that conversation when you talked about a debt based monetary system and you said, we're nearing the endpoint of a debt based monetary system. And I was wondering, could you elaborate a little bit more on that? Why is there an endpoint to a debt based monetary system? And
Sure.
just for someone that might be listening, um, can you explain a little bit what are the consequences, ramifications of a debt-based
Sure, I'll
monetary
try.
system?
I'll try. I mean, it's really kind of just math. And if you think about what debt is pulling consumption forward from the future. You borrow money that you don't have to consume something today. So, and that's in and of itself inflationary, but the debt remains and you have to pay it back. And so you've got to make more money to pay the debt back. And so if there's not a continual flow of new money into the system, the debt starts to default. And so these are what we call classical credit cycles. And there have been many, many credit cycles. I mean, this story is as old as man. I mean, these things were happening in biblical times. People would, and this is why the whole concept of a debt jubilee occurs, because people just get so indebted they can't pay it back anymore, and the debt collapses. And so, this is what happened in the 20s and 30s. We had a big bubble and a debt collapse, and here we are 100 years later, and sure enough, we're going through the exact same cycle. And in the 20s and 30s, what they did was they confiscated the gold and they reset the gold price, so they created some inflation, and then they built off of that base, and they had a sound money base because they were on a gold standard. We don't have that today. This has happened in many countries throughout the world. I mean, people who live in South America or Argentina are very familiar with this. They've had many debt crises, and more recently, Venezuela had a debt crisis. And it's what it really stems from is politicians thinking that there's a free lunch and spending more than they collect in taxes or more than the economy can handle, and they borrow to do that. And then, in order to make the borrowing not go bad, they print money to pay the interest on the debt. And so, if you kind of consider the world is the world, and there are a bunch of people in it, and there are a bunch of factories, and there's what we call goods and services, and the amount of goods and services in the world grows every year based on either population growth or increased productivity, but it doesn't grow massively. And so, the dollars or the paper currencies that we work with are a claim on those goods and services. And so, if you start issuing more dollars into the system on a regular basis, each dollar buys less. It's just classic monetary debasement. And what happens is eventually in a credit based system, the structure of the credit gets so large that it's just obvious that either the printing has to become incredibly large in order to keep the system going, and therefore the dollar value, each dollar becomes worth a lot less because there are more of them in circulation, or the debt has to be, the debtors say, well, pay me back, in which case everybody has to cut back on their spending in order to pay the debtors back, and you have a debt collapse. So you get either massive deflation, which is what we had in the 20s, or you get massive inflation, which is what Venezuela and Weimar Germany and countries that spend too much have. And honestly, our situation could go slightly either way, but I think we're going to trend towards the inflationary side, because I think the government and the Federal Reserve have more or less said we are not going to let this economy fail. If things start to turn down, we're going to, we've got enough money, and the prevailing belief in government and many economic circles, particularly with these new MMT people, is that we can print the money. Don't worry about the money. We can print more. And they're right. They can print the money. They can give everybody the money to service the debts. I mean, look at what they did, in March of 2020. They sent checks to people. They put money in companies. I mean, healthy companies. They gave them money and said, as long as you don't fire anybody, you can keep this. I mean, I know several companies didn't need the money, but they took it because it was given, and it was just a government grant. And so, they can create the money to keep things going. That's the good news from a keeping things going standpoint. The problem is that when you grow the money supply 40% in 18 months, which is what happened, you've got now 40% more dollars chasing the same amount of goods and services. And guess what? The price of those goods and services is going to go up because there's more dollars chasing it. It's just a supply and demand issue. So, and this is why you see, and people react to it too. I mean, this is why we see housing prices up 20% year on year. I mean, one could make a strong argument that that's an intelligent thing for people to do. I mean, you need a house. House has a certain cost. You don't want the house. I mean, the house is going to go up in value over time, and you can borrow against it at a subsidized government rate. So here you are, you get to buy an asset that's going to have value for 20 or 30 years, and you get to borrow money at 3% to do it. And that asset's increasing in value. Last year on year, a lot of house prices went up 20%. That's a really good deal. And so that's classic inflation. Now you asked, why does it have to end? Because the math just becomes too extreme. Because, because it's just so far out of whack. I mean, part of what keeps these things going is interest rates are falling. But, as many people know, we had negative interest rates in Europe, and we had very, very low interest rates here. We had zero interest rate policy for many, many years. So interest rates can't really go negative. So, interest rates have fallen about as much as they can. The debt level has gotten about as large as it can get. The economy is kind of chugging along, but it's not like it's growing fantastically to pay down the debt. And absent some huge, productivity miracle, like suddenly somebody invents cold fusion and, we don't need oil anymore or something, which is unlikely. There's really no way out but to either, you either let the debt collapse, which is possible, or you print the money to service the debt, which is fine, but that's why gasoline will be $5 soon, because you printed the money to service it. That's why oil is making record highs in the mid 90s right now. And so it's just math. There's nothing really magic about this. And these cycles, if you study history, these cycles have occurred over and over and over again. And the reason most people aren't familiar with this, they don't understand it, is that most people don't study the history of the 1920s and 30s. I mean, there's nobody alive today who lived through the last one of these, because the last one of these happened in 1920 and 1930. And, the people who were alive then and were investing then, they've all passed away. And so, human beings, what we are, we go on, we repeat the same mistake. And here we are. It's very unfortunate, but it is what it is. You and I didn't make it this way. And what we can do is position ourselves as best as possible to protect ourselves, and then argue for a better system, so that the next time around we don't do this again. And maybe we'll get to that next. But
Yeah, and I think about how it's just kind of a perfect storm when you couple the
yeah,
fact with shutdowns and lockdowns, because not only did you print 40%, as you said, of all US dollars in circulation in a mere 18 months, but now you have an even more finite amount of
right,
goods and services, and as you stated, less productivity, less labor, less people working. There's
right,
the headlines of the great resignation.
right.
um and so it's this bizarre culture you're creating at the same time, which is not sustainable in and of itself. And so I wonder, it's funny that you said that about the 40%, because my next point was 40% of all US dollars were printed, or as Rick Rule says, counterfeited into existence
Uh,
since the shutdowns began. How
yeah.
much more money can and will be created before the system falls apart or implodes?
It's so hard to say, and it's so hard. People say, "Well, okay, I get your thesis. Please tell me how it's going to play out." Do you know what I mean? And I'm not smart enough to know. I don't think anybody really is because it involves so many different actors and the moves that they make. And I look at the Federal Reserve. I mean, they're probably the primary actor, right? Because they set the interest rate, set the monetary policy, run the printing press or don't. And the federal government. And so, they can go one direction and we'll have one outcome, or they can go another direction and we'll have a slightly different outcome. It's hard to say. I mean, I like to say I think they're driving a clown car and they're bouncing off these guardrails of inflation and deflation. They go too far in one way and they have massive inflation. They go too far the other way. Right now, we're kind of having a little bit of a deflationary impulse because Joe Manchin and they knew when they printed all this money that they were going to have an inflation problem. They misled us and said it was transitory, but they knew better. And when Bitcoin took off from 5,000 to 60,000, and gold took off from 1800-ish, 1800-ish up to 2050, they thought to themselves, "Uh-oh, we got a problem here." And so they really tried to back it down. That's why Manchin put the brakes on the additional stimulus, and they tried to talk inflation down and everything else. And they've been trying. I mean, now they're talking about, tapering, they're talking about higher interest rates, and all of which we'll have to see. I mean, I suspect they'll probably try some of that, quote unquote, until something breaks. And my strongly held belief is that something will break because, I stole this line from Max Kaiser, but this system has an element of being a Ponzi scheme. You continually need new money to keep the old money alive. And I think there's a high probability. I mean, you can't taper a Ponzi scheme. I mean, they're going to be forced into printing more, or that we're going to have we're going to have the 1929 scenario where we have a big depression. And my suspicion is that so they're skating a fine line. And on one side, there's very high inflation. On the other side, there's a collapse of all this excessive debt that we've built up, and they've got to make a decision. And they're obviously trying to skate right down the middle of this road. On one side, they want to total financial collapse. On the other side, runaway inflation. And they're trying to hold it together. And they may be successful for a few more years. But, they got their hands full because, you see things breaking. As an example, the Evergrande stuff in China. And there's been a lot of things that are breaking in China. You see some things breaking here, smaller number of things. But in turn, you also see really massive inflation. I mean, 7.5% is reported, but we all know that the real numbers are higher. You look at healthcare, you look at cars, you look at houses, you look at so many things. So, they got a real inflation problem and they know it, and they're going to try like crazy to fight it. But I don't think they'll be successful. And if they fight it too long and too hard, they're gonna find they've got a deflation problem because people are gonna, the economy is going to slow down. People are going to lose their jobs. We're going to be going the other direction. And of course, in my opinion, what'll happen then is they'll come right back to the printer and they'll start going in the other direction. So again, I like to say the Fed is driving a clown car, and they're bouncing off these guardrails. One of them is inflation, the other is deflation. And we can't know exactly how it's going to end, but one of them is going to take over and get going in a spiral, and it's going to be one hell of a mess. And my bet is that one is inflation. That we're going to, and I don't know that we're going to have Weimar or Venezuela style hyperinflation, but I think we're going to have extremely high inflation in the next 3 to 5 years. And the implications for that are, and then there'll probably be some kind of a monetary reset or a restructuring of the dollar, maybe a return to the gold standard, maybe the Bitcoin standard, who knows? But, at some point, inflation, maybe they'll put in price controls. I mean, there's been some talk of that. I saw that today on Twitter. Somebody said, there's some senator who said, we're going to take action to fight this inflation. And I thought, I know what this means. They're going to put in price controls. Well, they can put in price controls, but guess what we're going to have then? We're going to have shortages, right? I mean, you cap the price, or they could do what they did in World War II. They could do rationing, and say, okay, everybody only gets so much food, so much fuel, so much this, so much that. I mean, I don't know what they're going to do. And that's the part that's tough to predict. But, excuse me, we do know that it's a problem. And we do know that, they're going to try and do a number of things. And all we can really do is watch how they do those things and watch how it plays out.
Yeah, you talked about price controls, and I feel like it's pretty obvious to see the stage that's been set because whether it's Elizabeth Warren, whether it's Jen Psaki, or however you pronounce her last name, Biden's press secretary, you see a common theme where they're actually blaming inflation
On
on
companies. Yeah,
greedy whomever, greedy
yeah,
meat producers, greedy corn
yeah,
growers, greedy trash bag makers, whatever the hell it is, right?
yeah.
Like you can see clearly what they do is they skate the puck, they skate before the puck gets where they want it to be to frame
Yes.
where they're going to push it next. And so that's going to be an interesting thing to watch. But you mentioned the term um, a reset. And I want to know, do you still believe we're in the age of the great currency reset? And if so, what does it mean right now?
Yeah, I do believe we are in that age. I do believe it's coming. I don't know how it's going to look because I'm not, I don't have a crystal ball, but I think that the math argues very strongly that at some point in time, either deflation is going to get the upper hand and we're going to have an economic collapse, or inflation is going to get the upper hand and everybody's going to be screaming about inflation. And that somebody at the top and some, monetary people and politicians are going to realize that the correct solution to this problem is to return to a sound money standard. So I feel strongly that will happen. I mean, it could be a Bretton Woods 2, it could be a worldwide thing. It could be Russia deciding to put the ruble on a gold standard. It could be China deciding to put the yuan on a gold standard. It could be everybody coming together and deciding Bitcoin is going to be the standard for the numeraire of the currency. I mean, I'm not sure what, all of those would be decent solutions. And as bad as inflation is, there is a solution to it. And it's pretty straightforward. It's just stop printing the damn money. I mean, and put a sounder money in place. I mean, in countries that have collapsed with inflation and had their currency collapse, what happens is they bring in a sounder currency, either from overseas or they reset their currency to a gold standard. And historically, I mean, before Bitcoin didn't exist until 13 years ago. So, and I think that's going to have to come. I think what they'd like to do, in case some people are wondering, is they'd probably like to go to this central bank digital currency, right? They're thinking that we're going to jump from the dollar to a central bank digital currency and we can control it. The problem is that people, when as this inflation continues and gets worse, people are going to come to realize what happened, and they're going to realize that it was the government having control of the money and printing too much of it that caused all their misery. And so the government comes in and says, let's do the central bank digital currency. And everyone's going to say, nope, got no interest in that. You know, we don't trust you. I mean, I was reading a paper last night that talked about, I don't think in the United States, there've rarely been times in the United States when the overall level of trust in our government has been lower. I mean, across all parties. I mean, the level of trust in the federal government right now is like at an all-time low. And I suspect that's going to get worse. And so the only way to restore trust, in my opinion, is to go back to a sound currency. And unfortunately, very few people understand that right now. But when gasoline is $10 a gallon, and there are protests everywhere, and people are screaming about how bad inflation is, some politician's going to emerge that's going to understand the issue and say, "Hey, here's what's killing us. We need sound money." At least that's my belief and hope. That's my optimistic hope. I mean, some people say I'm very naive in that respect. We've got to go to a total collapse. I'm not so sure we do. I just think we need to do a reset.
Yeah, it may be. I wonder now. Maybe it's going to be a micro reset. I mean, there's
Yeah,
obviously a central
yeah,
organization, the World Economic Forum, Davos, that they want a reset that they control. And I want to watch what I say because I've gotten in quite a lot of trouble on my channel lately, and but just seeing in Canada, you can see why a central bank digital currency will be so bad with the bank freezes that are starting to happen there with the protests. What happens with the central bank digital currency? Not good. But
right.
um, what I've what one thing I've been silently cheerleading on the side for is El Salvador.
Yes,
Um, what an interest. I mean, we'll see what happens, but man, you got to respect their president, and at least he's innovating. At least he's doing something
absolutely.
different. And that's why I say, like, maybe it'll be a micro, because you're right, like, people are waking up. Even my family members that they would never have had a conversation like this, even when they started printing all the money at the start of the lockdowns, and I'm like, oh my gosh, it's going to be so bad and this is going to happen, and they didn't, they were like, okay. And
Right. Calm
now
down.
nobody can, doesn't matter what your political ideology is, unless you're the press secretary or a senator. Everybody understands something isn't right and prices are getting out of control on everything. My
Yes.
brother-in-law owns a garage door company, big successful one here in Utah, and
Yes.
obviously the town's growing a lot. His prices have increased. I forget what he said, like 50 or 70%
Oh my.
just since the lockdown started.
Wow.
And he's a brilliant guy. He runs a fantastic business, but he certainly isn't watching channels on this type of stuff. But he's aware how bad inflation is in real life, and everybody's starting to realize that. And
That's right.
so I wonder what the reset is. Um, is
We
it
all do.
a
Yeah.
mixture of a Davos reset coupled with micro groups like El Salvador? I mean, what's your best prediction as this kind of mass awakening occurs? Um,
Boy,
what do you think?
it's yeah. I wish I had the silver bullet answer. I really don't. I mean, I think what El Salvador done is brilliant. Has done is brilliant and great.
I love that guy. Have you watched? Do you watch
Oh,
his Twitter?
oh yeah, yeah. He's great. And I mean, look, and yes, as your brother-in-law has observed and others have observed. I mean, there's almost you have to be kind of blind to be living in the U.S. today and not realize that we've got serious inflation problem, right? And in a year or two, it might be worse. So then, I would suspect today, I don't know, more than half the country certainly understands it. Perhaps 80%. I don't know, but soon it'll be the entire country will know. Oh my God, we've got an inflation problem, and so how we get from there to it's fixed with a solution. Well, that's hard to predict and messy, to be frank. I mean, and, but it's when you get enough people aware of a problem, um, and you get politicians being what politicians are, they want to make people happy, and that's what gets them elected. And by the way, as this problem gets much worse, I think it's kind of death for both parties. I mean, I'm suspecting that the average American is going to go to the polls and just vote for whoever's not in office, because it's kind of like it can't get any worse than this. I mean, if they're Republican, fine, I'm voting against him. If they're Democrat, doesn't matter. I'll vote against him too. Because when things are this bad, and therefore, as I said earlier, what I hope is that somebody emerges who understands the core issue and says, "This is the core issue. Follow me." We need to have a monetary conference. We need to restructure the debt. We need to go to sound money. I mean, um, you know, it's long overdue, as I guess is what I believe now. But a lot of times people won't get to that, and they won't have that solution until all other things are tried, and they're really desperate. I mean, I hope we don't have to get there. I hope that awareness arises and leadership arises that get us out of it, relatively painless way in a few years. But to be honest with you, that's the optimistic view. I think a more realistic view might be that it's going to have to go quite some time and get pretty bad. So,
How about protecting yourself? You mentioned gold, silver, and
right,
Bitcoin. There's that phrase that's said a lot, kind of in this niche, that's to be your own central bank or to leave the system.
right,
And, I've always lived by that principle. But once again, I've got to reference Canada and the debanking of individuals and the freezing of
sure.
accounts. And, it's like, wow, certainly it gives a new meaning to that phrase. So, what do you mean by protecting yourself, and why gold, silver, and Bitcoin? And what is your opinion on the future of them as people lose more faith in currency? You just think naturally more money will move, or what?
Yeah, I mean, I've been over these numbers many times, but they bear repeating. I mean, look, we historically our money has been reasonably well managed by the, well, I'm being generous, but we haven't had the kind of inflation problem that we're seeing now for a number of years. So people have been complacent about this issue, but they're going to become a lot less complacent because there's nothing like seeing the value of your savings go down that causes you to think, how am I going to prevent this from happening? I need those savings. And so, the issue is just it's really straightforward. I mean, they're diluting the monetary stock. If you basically add 40% to the outstanding currency without increasing goods and services, you've just taken the price level up 40%. Now, it doesn't happen overnight, but it will happen with given time. Um, so the issue is that they're watering down the currency. So what you need currency alternatives that cannot be watered down. The supply of silver doesn't grow very much every year. The supply of gold grows at about 1.7% a year. The supply of Bitcoin grows at about the same level, but it'll be cut in half at the next halving, which is scheduled in a couple of years out. And so these are monetary substitutes that cannot be printed, that cannot be debased by the government. And that's why I argue for them as a way to protect oneself. The cap on issuance of Bitcoin is 21 million. So it's actually a deflationary currency. I mean, it will go up even more because, there at some point there'll be a fixed number of them out there. Gold does grow every year, will continue to grow every year. We mine it, and every 40 years, the amount of gold in the world doubles. But it's still, it's until Bitcoin came along, it was the soundest money. And so basically, what I think is going to happen is these things are going to go to the moon. Let me give you some numbers. I mean, worldwide, there's about $450 trillion of assets out there, and that's when I say financial assets. I should say not real estate, not derivatives, and that's bonds, stock, and cash. 450 trillion. That's the aggregate amount. So there's about $1 trillion worth of Bitcoin, a little less now. There's about 10 trillion of gold, but only 5 of it's tradable because the rest is in the form of either jewelry or it's in central banks or it's in museums. And then there's about 1 trillion of gold stock. So add all those up. So there's $7 trillion of what I consider to be sound money alternative assets. And there's $450 trillion. I mean, just the bond market's over 100 trillion of bonds, stocks, and cash. So everyone who owns a bond, a stock, or cash is being robbed to the tune of inflation every year. So if you believe inflation is 10%, if you own a bond or a stock and it doesn't go up 10% in any given year, you've just lost money. And so, that's the inflation effect. And over 5 or 10 years, you've lost a lot of money. And so what I believe will happen is that 450 trillion, some piece of it's going to wake up and say, hey, I'm getting baked here by this inflation. I want to save in something that doesn't go down in value. In fact, it goes up in value. I'm going to take some of my money and go chase gold and silver and Bitcoin. So even if it's only 10% of the 450 trillion, that's 45 trillion that wants to buy $7 trillion worth of assets. Well, that's 7x, the existing, I mean, Bitcoin's not going to grow, gold's not going to grow, silver's not going to grow in terms of the supply side. So you add 7x the demand to what's there right now. I mean, I sincerely believe Bitcoin will be in the hundreds of thousands within a few years and millions within 5 years. I sincerely believe gold will be 5,000, probably 10,000 within a few years, 3 or 4 years. So, and in fact, it's interesting to note that when we were on the gold standard, and we were up until 1971, there was actually a way of computing the fair price of gold. I mean, you could look at the M2 outstanding, you look at the gold that the U.S. owns, and you could balance the two, and it balanced at about $35. This was in the 60s before we started printing. And of course, when we printed, that led to us going off the gold standard, but that's a longer story. But the point is, if one were to do that exact same math today, look at the amount of gold the U.S. has, the amount of dollars the U.S. has created, gold should be trading at $32,000 an ounce, and it's trading at $1,800 an ounce. So that's a big difference, right? So, if we reset, gold is going to go a lot higher. That's a very big asymmetric bet. And Bitcoin is a similar asymmetric bet, that there are a fixed number of them. And if it becomes, as I believe it will, it becomes truly the best form of digital gold, I think people will be paying $1 million a coin for a Bitcoin that today costs $45,000. So, this is the way that I believe individuals should protect themselves. Now, that's not to say you take 100% of your money and you put them in these assets, but it is to say that if you don't have 10 or 20 or 30 or 40% in these assets, I don't think that's wise. I think having something in this category to protect you against inflation is a very, very sound thing to do.
Um, when we're talking about the reset, you know, I think there's like a non-regime reset, and then there's
Uh-huh.
a regime reset. And
Right.
for the non-regime reset, which is I would liken basically to the Western globalist financial and corporate system. On that point, one of the things that I have been wondering about, there's a lot of talk about Russia recently, and they were saying like they're gonna, they'll put more sanctions on them, and Russia came out and they said, we're not worried about sanctions.
Right.
Do you suspect that Russia or any, I mean, obviously El Salvador is a smaller player, but do you suspect any very large natural resource players, whether it's oil or what have you, will begin trading their oil in Bitcoin or gold?
Oh
Do you think
yeah.
that's going to happen?
Oh yeah. If you read Luke Gromen, who's brilliant on all this stuff, I mean, you can see the de-dollarization process is well underway. I mean, these other countries aren't stupid, and they can see what we're doing in terms of our spending and our monetization of our debts. And so, yeah, I mean, Russia has announced that they're going to sell their oil and gas in euros, not dollars, and in turn, I think they take a lot of those euros, and to the degree they still accept dollars for certain things, they immediately convert it into gold. I mean, Russia's been one of the largest buyers of gold, as has China. Although China's a little more opaque about it, they don't really fully report. I don't think you can really trust all the Chinese statistics, but
Really?
yeah, shocking, right? but but the point is that yes, these other countries are not dumb, and they are positioning themselves for some sort of a currency reset. Now, in turn, we have all the guns and we are the military hegemon, and I don't think any of them really wants to tweak us and start a war over this money stuff. But I think they're very content to sit back and bet the way that other sound money people have bet on the fact that over time the dollar will continually debase. It has to. It mathematically has to. And really, the last people to get the joke are a lot of US investors who've been kind of fat. One of the things I think has made people so complacent about this and why people are missing this is, of course, it hasn't happened for 100 years, as I said earlier. But also, you've had 40 years of deflation. And even since 2008, the right thing to do has been to buy the dip in the stock market. I mean, the stock market has gone straight up from 2008 until, late this fall. I mean, I believe we're in the beginning of a bear market in the stock market. I believe the tide has turned and we no longer live in a deflationary environment. When we were living in a deflationary environment, that was nirvana for financial assets. Bonds did well and stocks did well. If we're living in an inflationary environment, turn that all on its head. What happens to the companies is their costs go up. Sometimes they can push the prices up, sometimes they can't. But I can tell you that the last deflationary decade we had was the 70s, and stocks did very poorly during the 70s, and bonds did extremely poorly during the 70s. And so I think one of the mistakes a lot of investors are making is they're investing with a rearview mirror in mind and saying, well, we've got technology, we've got this China price, we've got a lot of cheap labor coming on. Inflation is not an issue, and it hasn't been an issue for 20 years. Therefore, it won't be an issue going forward. But I think that string has been played just like every cycle to everything within finance kind of tends to move in cycles, and you get out on these extremes. I think we hit the extreme, the peak of deflationary, deflationary trends, in the last couple of years, and now it's going the other way. And the stock market in particular, I think, is incredibly dangerous. I mean, I think the stock market could fall 50% in the next 2, 3 years very easily. It's very, very overvalued. And inflation is going to push up the costs of all these companies. They're not going to have as big of profits. And interest rates are going up. And part of the reason why people justify these high prices in stocks is they say, well, you can't earn anything in bonds, so you have to be in stocks. They even had an acronym for it, TINA, right? There is no alternative. I have to buy stocks. Oh yeah, there's an alternative, all right. Gold, silver, and Bitcoin, and oil. I mean, if you look at, I was around the 70s as a teenager, but if you look at the 70s, there were two categories of stock that did incredibly well in the 70s. I mean, like 20 or 30% a year compounded. And it was gold stocks and oil stocks. And because both of them were really good inflation hedges. And so if I'm correct that we are entering a period of inflation, I believe we are, witness the 40% money printing and the inflation numbers we see. If I'm correct about that, we're still early days in these trades. I mean, gold and silver and oil are going to be much much higher in 10 years. So,
Yesterday I was playing around with numbers, and I was kind of coining this phrase to myself, my inflation calculator, right? And so, you know,
yeah.
a lot of people focus on investments, and we talk about it a lot on this channel, but I'm a business owner and I own quite a few different businesses. So I care a lot about cash flow, and I care a lot about profit. And so I was just doing the math with like my little inflation calculator. If you took the 7.5% number of inflation, you
Sure.
compounded it over 5 years, and you took your present annual income and you did the math against that and then added taxes. And it was pretty staggering how much how much of your purchasing power has gone. And I was wondering if you could elaborate a little bit on that idea of an inflation calculator, in the real time loss in purchasing power, say over 5 years of a even number $50,000 a year income.
Oh, it's huge. I mean, it's huge. And the tragic thing, it's so sad, Jake, is that, you know, um, people's wages will start to go up. I mean, we've seen that, right? I mean, we saw Caterpillar strike. We've seen other cases where wages are going up, but they're not keeping pace of inflation. I mean, if the cost of everything you buy is going up 10%, and you got a 5% wage bump, you're still worse off. And but yes, I mean, in the 80s, in the 70s, they called bonds certificates of of confiscation, because I mean, really, I mean, think about it. Right now, the 10-year bond is yielding about 2%, and inflation is running 7.5. So that means every year you buy $1,000 bond, every year you're giving 5.5% of that bond to the government, more or less. And in 10 years, I mean, I haven't compounded it here, but just simple math, that bond will have, if inflation stays where it is and the interest rate is fixed when you buy it today at that interest rate, you'll have lost 55% of your purchasing power by buying that bond. So you're giving the government $1,000 to buy a 10-year treasury bond. And in 10 years, when they give it back to you, you'll get your $1,000, but that thousand will buy $450 worth of stuff, because the price of all the stuff will be higher after all that 7.5% inflation. It's actually larger than that. I haven't done compounding, I've just done straight math. But the point is, yeah, inflation really eats away at bonds and stocks. It's incredible. And I don't think people have focused enough on that. I think people are being naive, or they're missing that risk, because again, it's very natural for human beings to kind of look at the past and assume the future will be the same as the past. And we've had a period where bonds were fine and stocks were fine. But I think most of your listeners and a lot of people in the world can now look at the world and say, hey, you know what? Something's changing here. This is really different and it's not good. And so what I would suggest they do is, okay, dive into that rabbit hole. And yep, they're right. If that's their intuition, dive in on that, and start doing your research. Get on Twitter, start studying about inflation, start learning about sound money, start learning about gold, silver, Bitcoin, because making investments in those categories, in my opinion, is going to be the way to protect yourself and save yourself. I mean, particularly for older people, I mean, it's tragic. You work your whole life, you have some savings, you're counting on those savings to support you in years when you may not be able to work. And, if the savings are buying less and less, that's a very sad and scary situation. Whereas if you invest in the right things, you'll maintain your purchasing power. And gold has always traditionally maintained its purchasing power. I think Bitcoin's going to do better than maintaining your purchasing power. The issue with Bitcoin is it's extremely volatile. And so you've got to be careful that you don't get shaken out when it goes down. I mean, I think it's going to outperform gold massively. I think it is digital gold. I think it's better than gold in terms of creating alpha and the Sharpe ratio. But the problem is, and the sad part is, some people buy it at the top, and then when it goes down, they sell it. If you paid 69 for it, a couple of months ago, and it went down to 35, it's very easy to think, oh, I made a mistake, and you sell it. No, the answer is no. If it goes down to 35, you buy more. And so it's important, in my opinion, with Bitcoin to dollar cost average into it because of the volatility, and just hold it. Hold it for long periods of time. Bitcoin has compounded at 200% a year since it was founded, or since inception. And I think that's going to continue because it's a network, and it's just sucking everything in. Go look at the return on Facebook, Netflix, Google, Amazon. I mean, those stocks have been complete home runs. And the reason is that they're taking advantage of a network effect. And a network effect says you've either got to participate in the network or you're left behind. And so those don't grow mathematically, they grow geometrically. If you bought, I mean, this is probably the biggest investment mistake I've made in my career. I looked at post 2009, I looked at these companies, I saw they were growing rapidly, but I looked at the valuations. I'm like, God, this thing's overvalued. Amazon, it's not making any money. It's trading at 5 times revenues. How the hell can I pay that? It's too expensive. Well, that was a mistake, because Amazon became a network that grew geometrically, just as Google did the same thing. And here you are, you're presented with a do-over, which is Bitcoin is a network about sound money. It's the sound money network. It's a monster. This thing, Bitcoin is going to go to hundreds of thousands of dollars per coin, and then it's going to go to millions of dollars per coin. And you can buy a coin today for $45,000. I mean, everybody needs to own some Bitcoin. The only incorrect allocation to Bitcoin is 0. Now, it's also very volatile. So maybe everybody only needs to own 1% or 5% or 10%. You can't take all your money and put it in Bitcoin, because if it goes down 50%, you might freak out. But you need to own some of it.
So I,
That's my speech about how you protect yourself.
so I guess then the thing is actually understand why you're buying it in the first place.
Exactly. And be willing and understand the nature of the asset, and be willing to ride the ups and downs, knowing that longer term you're on the right side of the bet. You've got a digital sound money asset that has grown at 200% compound for 13 years. I mean, here's another thing. See, the other reason Bitcoin's going to beat gold by so much is that gold's been around for 5,000 years. It's fully distributed, big Lindy effect on gold. With Bitcoin, it's only been around for 13 years. We're just hitting the 10% tipping point. In Malcolm Gladwell's tipping point theory, and he documented this, when something new comes into the world, generally there's a certain amount of time it takes until 10% of the people own it. And that's, you can see this with cars, cell phones, TVs, radio, any new innovation, you can see it, internet. And then once 10% of the people are on it, then it goes to 90%. And the same amount of time it took to go from 0 to 10 is the time it takes to go from 10 to 90. So it took 13 years for Bitcoin to go from 0% ownership to 10% ownership, which is where I believe it is right now. That implies that 13 years from now, 90% of the people in the world will own some Bitcoin. And if that happens, think about that. There are 7 billion people in the world. There are 21 million coins. Never going to be any more. You think that's going to be at $45,000 a coin? No way. There's just no way. It's going to be much, much higher. So to me, yeah.
Go ahead, please.
No, that's it. That's it.
Yeah, the thesis of leaving the financial system, as I stated earlier, it's always made sense to me, but it's never been more clear as you see the beginning stages of debanking and the freezing of funds for wrong think.
That's
And
the other thing, right?
obviously there's a certain amount of people that will go along with that, but it's not that high. And so where as this psychology shift and a larger distrust in even the security of one's money, let alone the fact that it's depreciating, but now the actual security of your actual money is gone.
Well, that's right. I mean, I know the case you're referring to, and we're all just horrified by, is look at these truckers, right? I mean, these guys are peacefully protesting a policy they think is wrong, and the government believes they've got the right to seize the money of anybody who sends money to them, or even claims that those people who are sending money to them, they can seize all their accounts. And I mean, And this is part of the evil of this whole, fiat money system that we've got. And that is that there are people who benefited from this. There are billionaires and Wall Street people, et cetera, who have benefited enormously from this system. And gosh, they don't want it to change. And so, they're going to do everything they can to throw sand in the eyes of those of us who want to go to a sound money system and, witness what's going on in Canada, as regards to these truckers, who I consider to be heroes. I mean, they are going to try to grab the money. And, it's, I mean, Roosevelt confiscated gold. Most people didn't go along with it. And that was in the 30s when people really believed in government. And, I think today, if they try to confiscate gold, most gold hunters would give them the finger. And if they try and confiscate Bitcoin, I can tell you for sure, most Bitcoiners are going to say, good luck. I got my 12 seed words. I got my treasure. What Bitcoin? I don't have any Bitcoin, and what you're seeing is a big shift. I mean, we've talked about this. I think we talked about it on the last call, but this is the fourth turning, right? I mean, this, in my opinion, I mean, we all know the generational cycle. Fourth turning is where an old system dies and a new system emerges. And I believe this fourth turning is all about sound money. And so the unsound money is what allowed governments to have so much power, as we come up until the point in time where we're at today. But they've abused it. They printed too much of it. They spent too much of it. They funded wars that we all didn't support. They've wasted it on stupid shit. And so, so that's naturally going to kill off their system. And the new system is this sound money system based on gold and Bitcoin. And that's what's going to come in and replace it. And so, but as you might imagine, as we've all seen, those who have a vested interest in the system, I mean, you've seen, I don't know, who was it, Munger, who called Bitcoin rat poison? I mean, it's,
And he also, I was a minute ago, I didn't want to interrupt you, I was going to say, I guess a good analogy is Charlie Munger praising China, right?
right,
Is that a good
right.
analogy there?
Yeah, right. Does anybody think the Chinese system of social crediting and scoring and I mean, is a good system? I mean, would you want to live in China? I know I wouldn't. Would you want to have a Chinese government? I know I wouldn't. I mean, it's communism, right? And so, look, the good news is that the internet, kind of a modern day Gutenberg press, and now Bitcoin, a modern day version of money that allows you to circumvent government controls. These things they're gonna bring these big institutions down. I mean, the Gutenberg's press destroyed the Catholic Church because it allowed everybody to read the Bible and realize that the church was bullshitting them, telling them a bunch of lies. And so a combination of the internet, Joe Rogan, and people finding their own sources of truth and information, and Bitcoin and gold. I mean, this is all going to go toward, destroying this corrupt system. And my view is the sooner the better. I mean, it may hurt, but let's just tear this band-aid off because, I want my kids and grandkids and me, to the degree I'm around here for a while longer, to live in a better world. And there is a better world out there to be had. I mean, if we could get back to sound money, things would be much,
And
much
people don't
better.
understand how many problems would be genuinely solved. You
That's
mentioned
right.
Max Kaiser earlier, and one thing that Max does so well is illustrate how out of this debt-based fiat monetary system is what allows the many evils that, regardless of the political
Absolutely.
spectrum, people don't like, whether it's wealth inequality, whether it's funding wars,
Absolutely.
whatever it is, corporate power, it comes actually from this very thing.
There's no doubt. I mean, fiat currency allows corruption. It's inherently dishonest because it's theft from honest working people who try to save their money and don't have access. We all know the cotillion effect, right? I mean, let me borrow money at 0% and go invest in real assets. I'd be a billionaire too. And that's what Wall Street and the people in power have been able to do. But they deny the rest of us that privilege. I mean, if we have credit cards, we pay 14% interest on them. So yeah, it's I mean, they're two
And
great
if you
lines.
mention Joe Rogan any more times, you're going to be paying 25% interest rates by the end of this episode, Larry.
Oh, I'm sure. Yeah, whatever. I mean, look, there are two great lines on that go to this, and Neither one is original on my part, but I think they're both great lines. I mean, one is that just the Bitcoin fixes this. I mean, if you look at a lot of problems in the world, Bitcoin fixes this. The other thing is my byline on Twitter, and I really do believe this is, fix the money, fix the world. I
Hmm.
mean, the fact that the money, most people can't see this. Most people kind of know society is not on the right track.
Hmm.
There's wealth inequality and there's inflation. There are a lot of problems, a lot of nastiness, a lot of political division. They've got us all fighting with each other. And really, this isn't about blue green or blue red fight. This is about elites having a system where they've basically strip mined the country, and they're flying around in their jets and mega yachts, and the rest of us are just trying to get by. And so it's about having a fair system. And there was a time in America we did have a fair system. I mean, we were on the gold standard from 1789 all the way up to 71. There was some variations in it, but still, it was a much fairer system than what we've got today. And we didn't see this wealth inequality when a CEO made, 20 times what a worker made, not 2,000 times what a worker made. It's a very, very unfair system, and it's all driven by fiat currency. But that's the bad news. The good news is fiat currency is sowing the seeds of its own destruction, and it's going to fail. And when it fails, we're going to go back to, I mean, I often say I think God has a sense of humor, right? I mean, he's going to cause their thing to blow up, and our thing's going to work. And it's going to be a much better world when that does happen. But the transition, I mean, the transition could be bumpy. Let's not kid ourselves, and that's no fun. But we didn't create the system, and I don't think we should be blamed for the bumpiness. I mean, my view is let's get to the other side where it's better. So,
So let's end. I know we both got to go, so let's end with this. Is the last question is, why should I be optimistic? I've got a 19-month-old daughter. I told you before this episode, my wife's pregnant with number two. Um,
congrats.
and I'm in a yeah, thank you. And I'm in a different stage in my life where I'm like, whoa, these people aren't even 1, 2 years old, and look what's happening. Why should I, or why should the viewer be
Oh,
optimistic?
you should be enormously optimistic. One, you got a ton of runway, so you can make a few mistakes and still recover because you're young. I'm 64. I don't have much runway left. So and that's why I want it to happen quickly because I want to see it. But more importantly, you are the hero generation. I mean, think about how great it was. The last fourth turning was the World War II. And think about how great, I mean, at the time, I think people were scared, but think about how great the 50s were and how what a sunshine it was for America in the 50s, 60s, and 70s as we reap the benefits of winning that fourth turning and being back on sound footing, and all created by the hero generation that fought the war, and you are the hero generation, and you're going to fight this war, and you're going to return us to sound money, and it's going to be really, really good. I mean, there's a lot of great stuff in this world that's only going to get better. And I actually take a very optimistic view. In the past, fourth turnings have always led to a shooting war. I kind of think we're beyond that. I think that World War II, where we slaughtered 50 or 60 million people, and even Vietnam, where we senselessly, killed 3 or 4 million people, I think they've taught people that the war's really not going to work. It's really not what it's all about. Who's going to fight a war? Do you want to fight a war? I don't want to fight a war. I don't know anybody that wants to fight a war. So, if all that happens here is we have a monetary collapse, which I think we're going to have, all that does is that just redistributes the wealth. If all the technology is here, the people are here, the houses are here, and nobody's died, things have been tough for sure, but nobody's died. And then we go back to a sound money system. System will repopulate itself and grow like crazy. And sound money, I mean, I think people will be shocked at how good things become. I mean, even countries that have had hyperinflation, when they return to the gold standard, they recover very, very quickly. They really do. Money is the primary signaling mechanism that makes an economy work. The reason this economy doesn't work is that the money is broken. It's badly broken. Nobody knows what any price is. I mean, it's you break the money, and it's all kinds of unfairness, unemployment, inequity. I mean, you name it. Nothing gets done correctly when the money's broken. And so you should be incredibly optimistic because certainly within your lifetime, I believe within my lifetime too, but assuming I make it to 95, but
And if it takes
certainly,
30 more years, I'm going to be pissed at you, Larry.
well, I don't, yeah, and I don't think it will. I kind of, I put I think we'll be in it really in the soup in 4 or 5 years, and I think it'll be resolved within 10. That's my optimistic view. So that, and so from the time it gets resolved, it's going to get great after that, and you'll still be quite young. I'll be on the sunset, but you'll be quite young. So, I think you should be extremely optimistic. There are a lot of great things in this world, even as screwed up as it is. There are a lot of great things in this world. I mean, look at the benefits that technology has brought us. Look at the ability that we have to communicate here. Look at the internet and the way it makes the New York Times and the narrative told by the elites just irrelevant because everybody knows they're lying and they're full of shit. I mean, it's what I mean. Seriously. I mean, when I was a kid, the New York Times said something. That was it. That was the truth. You couldn't argue with it. And now everybody knows it's bullshit. And so it's going to be a better world, Jake. It really is. It's also going to be more smaller and more divided. I mean, it's not. We're not going to necessarily need these big monolithic countries. I mean, we might grow into smaller nation states or smaller groups of people. So some people want to live some certain way. Well, they'll all go to some place they'll live that way. And the rest of us will want to live more libertarian. Well, we'll all go there and we'll live there. I mean, you're kind of seeing that now, right? I mean, you kind of see Texas and Florida, looking at the rest of the country going, hey, we don't want to be like you guys. We're different. And, so who knows where that leads, but it could lead to, to good things, in my opinion. So, I would be extremely optimistic. I'd be wary though. I mean, it's going to be bumpy. It's going to be really bumpy, but here's the other thing to be optimistic about. You're young, you're bright, and you understand the problem. I mean, and that gives you an enormous advantage. The average person in America still doesn't really understand what the problem is. I mean, it's starting to be obvious to them because they're seeing the inflation, but it's unlikely they understand the root cause, right? So, by the fact that you have knowledge of the root cause can lead you to go in the right direction. And by the way, that going in the right direction, it can really make you rich. I mean, people who in the depression knew what to do business wise and went in the right direction, they became very, very wealthy coming out of it. I mean, I can see a world where I can see a world 20 years from now where it'll be like, did you own Bitcoin or didn't you? And if you owned Bitcoin early, you're friggin' rich. And if you didn't own Bitcoin early, it's kind of like, Jesus, what happened to you? I mean, I'm pretty sure my grandkids are going to say, holy shit, thank God that old fucker figured it out. Because because we're pretty comfortable and we wouldn't be if he hadn't, you know what I mean? So I mean, there's stuff to be optimistic about. There really is. So
Beautiful. Yeah, I'm way more optimistic than I was 12 months ago, and I'm excited about
yeah, right.
the
I mean,
mass awakening that's occurring.
yeah,
And it's nice to see, these power hungry individuals showing their cards, because at the end of the day, it
exactly.
just wakes more people up. So I think that was well said. I know
Well,
you
let me
got
let
to.
me and let me add one more point to that. I mean, a lot of the gold guys are old and beaten up, and we're tired and everything else. You want to see optimism, positivity, and reasons to be sunny about things. Go to Bitcoin 2022 in Miami in April. Go to any Bitcoin conference, and Bitcoin people are positive because they understand what the issue is, and they understand that they have the solution, and they see how it's going to work. And so if you want to get a dose of positivity, go expose yourself to a bunch of Bitcoiners, and I think you'll come away from it going, "Wow, there really is a bright future if we go in the right direction here." That's been my observation.
Yeah, one of my really good friends, his name is Mark Moss. He has a great channel
Oh
on,
yeah, I love
early
Mark. Yeah,
adopter in Bitcoin.
yeah.
And Mark, just in private conversations, has taught me a lot and made me a lot more optimistic about as we have these shifts in the systems and culture. So I'm excited about it. I appreciate your time. I know you got to go. For everyone listening, we're going to link Larry's Twitter right there down below. If you enjoyed today's conversation, please make sure you give us a comment right there down below and hit the like button on this video. Comment, like, sends us out into the YouTube universe. More people see it. We want to thank you for watching today's episode. Subscribe, bell notification, all that good stuff. Larry, you want to end with anything?
That's it. I would just say, buy sound money. I don't think you'll regret it, and work toward a sound money world. Fix the money, fix the world. That's kind of what I believe. So,
All right, comment down below. Fix the money, fix the world. I like that one, Larry. And I want to thank you for your time today. Very
oh,
much
thank
enjoyed
you.
it, and looking forward to talking soon.